Hello again and welcome back. Our first video in this series had to deal with the COSI program and how we schedule appointments for our agents and how they get updated on on the appointments that they have for the day. If you haven't seen that video yet, please contact your manager. Because it's very important whether you're an appointment setter or whether you're an agent viewing this video. You want to make sure that you do view that video because it will show you what the appointment setter is doing on their side, as well as what your requirements to do logging into the system to update your appointment moving forward so everybody can be on the same page. That being said, this section is going to be all about the types of leads that you might encounter that the appointment setters are going to be calling. Now, these are older leads. These aren't going to be ones that are updated. Right now, at the time of this video is 2018, actually March 12th. Of 2018. So these are some older ones that I have just pulled up as an example because these are going to be very similar to the types of leads that the appointment setters will be calling. The similarity to these leads with all of them is going to be that there's three different types. Okay, I'm going to open up, first of all, at the time of receiving this batch. These were 3 to 9 month old leads. Obviously, you could see it was 2015. So, regardless, like I said, these are going to be older. So these are mailers that people that have recently got a mortgage. They received a letter in the mail, and they filled out various information to get more information on what a mortgage protection policy would do. It would pay off the amount of their mortgage if they passed away. In some cases, there's no physical or medical exam. There's a return of premium option if the benefits aren't used in the issue period. Disability can be included in the plan. If they get disabled and can't work, then they can get money available to pay their mortgage if they become disabled and aren't able to make their mortgage payments. Same type of thing with unemployment. If they were unemployed for a certain amount of time and have difficulty, they can borrow against their policy in order to make those payments. Critical illness, same thing, but it'll provide funds to them if they can show proof that they were in the hospital and became critically ill. They can use a larger portion of their policy in order to pay that. There are level premiums, meaning the premiums, once they sign up, remain locked in at that price. They don't increase due to age or health conditions or whatever until the policy expiration date. And most importantly, they can use the death benefits to help retain their home and pay other expenses. A lot of times with these types of plans, especially, and one thing it doesn't mention on here is accidental death. A lot of times with these plans, these policies can actually pay twice the amount of the policy that they have. In this case, if they were to get a $250,000 policy, with the accidental death benefit rider, which we'll go into again in a little more detail in another video, but just for this purposes, if they got a $250,000 policy, if they passed away accidentally, they could actually get twice the amount of that money, depending on the company that we write them through. So fantastic opportunities for these plans. If somebody obviously was looking into a plan like this to begin with, this is the type of plan that they want. And with the companies that we have, which are more than 15 different companies that we can quote them through, we can fine tune a plan that basically fits with all of their needs. Okay, so they basically looked at this, and we're not sure what point of this, that actually interested them, but they were interested in this, and they had requested to meet with somebody at some point. Okay, so We know that the interest is there. So you're calling these people back, that they had an interest at one point, and we want to make sure that they got the coverage that they needed. In a lot of cases, they may have gone with the very first person that called them up and got them a plan. Okay. Now, for example, take a look at the date of birth here. Okay. 1971. Plan for $250,000 for somebody that was born in 1971, between 1980 and 1970, is going to be very low. Probably within the 50, anywhere between $20 to $50 a month range, maybe a little bit higher based on what types of riders that they have, but very good. And more than likely, they're going to be very healthy. Okay. So when we call these people back, they may have gone already with the first person that they have talked to. So one of the main things that, and you might want to take a note on this, one of the main things that we're going to be saying to people at this time is, that's great, that you've got that coverage. That's fantastic. We couldn't hope for more, that, that you took the initiative to get yourself coverage right away. Congratulations to you. What I'm asking you and Chandra is, if we were able to get you the same or even better coverage for the same or better coverage for a better rate, would that make sense to you financially? That's great that you took the initiative to get coverage. The company may have only had one company to cover. We, to cover you, we handle 10 or 15 different companies that we can quote you through. We can get you the same or better coverage for a better rate. That would make sense to you financially, wouldn't it? Okay, so there's potential in these. Even if they did get a product right off the bat from somebody else that may have received this lead, you still have a chance. So you'll notice even in the same batch that you may receive, the leads may look different. In this batch, they're pretty much the same. Let's take a look at another one. Okay, here's another one. These are 10 to 18-month-old leads at the time that we received them. These are from our same carrier, but they're a little bit different format. Now you'll notice here is very similar to the last one we looked at 3 to 9 month old. Okay, the company that we work with changes the look of the lead many times in order to find out what's working for the customer. Okay, sometimes certain mailers that go out based on the verbiage that they use and the bullet points or the hot buttons like death, disability, critical illness, and all of that, sometimes those work with different mailers than they do with others. Okay, so you'll notice this one is pretty much the same as the initial one we looked at. They filled this out by hand. Okay, best time to call. A lot of great information here. Great information. Now, you'll notice this one looks a little bit different. Looks like it's typed in. Okay, that's because they received this mailer initially. Okay. Okay, and what they did is if you look right here, you may complete this form online by visiting our website at www.oursecurefamily.com and using the code below, like username and the password. And once they go online and fill that information out, it comes to us like this. Okay. And then they can add all of their information in there. And obviously, if they want to make comments, they can say, how much does it cost? I mean, what better indication that they're actually actively currently looking than for them to actually type in there themselves, how much does it cost? Okay. Fantastic. So, same thing. All right. And even though these are 10 to 18-month-old leads, I've ran into a situation many, many, many times. I would have to even say probably 50% of the time when they're at a 3 to 9-month-old lead, these people a lot of them have just purchased their house. They're just getting settled in. They want to think about it. They have a lot of other things to purchase. And a lot of them aren't even ready until 10 or 18 months later. They don't want to think about anything else. at that time. Some do, some don't. It's your job as the appointment setter to say, you know, I understand that you might have not been ready at that time, but, you know, right now we have someone available to go over those benefits with you. And that's where your job is as an appointment setter in order to make that happen. So, you know, look carefully at these. You know, another thing to look at too is, you know, their dates of birth. Okay. 1953, 1963, 1949. Okay. When somebody gets older than 65 years of age, now this isn't really, you know, you don't need to know this, but you kind of do. When somebody gets older than 65 years of age, 68, 69, somewhere in there, a lot of life insurance plans or quote unquote mortgage protection plans do not apply to those people for various amounts of reasons. Number one, the company that we want to quote them through doesn't handle anybody for that type of plan over the age of 65 to 67. Okay. Another thing would be is that they're in poorer health. A lot of times they may have had some serious health life conditions that may disqualify them from a term plan. So the way that we usually go with those people is they can go for a final expense plan. And a final expense plan usually sold as a burial plan to take care of funeral and burial expenses, but in reality, it can be used for any outstanding debt. Okay, so even though these people are looking for a mortgage protection policy, and even though they can't get a mortgage protection policy, maybe, okay, we can still offer them a final expense plan to take care, because you know the beneficiary is still going to have to make the mortgage payments. They're still going to have to make tax payments, okay, on the house. You know, they're still going to have to cover all of that outstanding debt, and with a final expense plan, that can handle some of those unexpected out-of-pocket expenses that they would have to pay if one of their loved ones passed away. So very important to know with people that are older. So, you know, most of these are going to have dates of birth on them. Okay. Here's another one. We wanted to see the rates and programs. Okay. And you can mention any of these when you're, you know, when you're talking with people. You can mention, you know, at the time that you sent this in, you wanted to see the rates and the programs that were available. According to my records, no one was able to get that information out to you. Do you remember what happened with that? Okay. See what they, and then just be quiet and see what they say, right? Oh, I already had someone stop by. Oh, yeah, the price was too expensive. Oh, we're not ready for that yet. You know, a lot of different things. You want to make sure that you bring out the objection, which we're going to talk about in another video, but you want to make sure that you bring out the objection with that person at that time. And don't be scared of it, because you want that objection to come forward, because then that tells you which direction you need to go in. And more importantly than from you to know it, it's important for the agent that's going on that appointment to know it, because they're not caught by surprise, say by something like, you know, well, I told that telemarketer or that appointment setter, you know, that I wasn't interested, right? You want to make sure that you get that objection covered first on the phone, so it doesn't roll over to the agent when they get to the house. You want to make 100% sure. And we'll go into more of that later. So again, now you're going to also notice on these leads that mornings, right? Mornings are good. Let's take a look at another one here. 10 o'clock is good. Mornings are good. That doesn't necessarily mean you can only call them in morning. Okay? Call them anytime. If you receive this lead at 5 o'clock at night, you receive this lead right here for John and Donna, call them at 5 o'clock at night, even though it says morning. Okay? Morning is going to tell you that that is the best time for them to meet with a representative. Okay, so for example, you're on with John and Donna, and you're like, okay, great. You know, you still need the protection. I got a representative available in your area tomorrow. They got a 10 o'clock or a 12 o'clock in the afternoon available. Which time would be better for you? Okay. Well, mornings aren't really that good for us. Oh, okay. Well, at the time you sent this lead in, it mentioned that mornings were a good time for you when you sent this in. Oh, yeah, that's because we were working afternoons, but now we're working mornings, right? So I would automatically, like we talked about in the next video, make a note. They were working afternoons, but now they're working mornings, and that time is not good for them. The better time for them now is in the evening. Okay. Again, some information that the agent can use when talking with them. What also you switch to mornings, and what is it that you do for a living? You know, uh, just in conversation. You know, you're already in a conversation with them about work and the times that they're working. Ask them what they do for a living. You know, make a note of it. And then that way the representative or the agent, once they get by there, can use that as a rapport gaining experience. So very important to use, you know, have a conversation with these people. That'll make you more real to them with the appointment. And again, there's a lot of more appointments that we'll get into when we talk about the script and the rebuttals. Just going through some more of these. The 10 to 18s are going to be looking a lot very similar to the you know, the 19 to 36, or in this case, the 19 to 50. We have this extended because we custom made this list, and you'd be surprised. You'd be surprised, and probably not surprised after calling them for a while, but starting out, you'd be surprised how many people do not have this coverage yet, even after a couple years. Okay? But again, I mean, all this is, you know, when I started out, you know, telemarketing and started out appointment setting, there is no such thing as a bad lead. As long as you got a name and a phone number, and my goodness, all the stuff that you got here, email address, they took the time to fill all of this out. Okay? And what a good lead that is. Up until the point where they say, stop bothering me, go away, that's a good lead. That's a good lead. They might not have been ready at 3 to 9. They might not have been ready at 10 to 18. But they might be ready at 19 to 36 or 19 to 50. Might take you more calls to get there, but you've got some ammunition. You've already got their dates of birth and what their height is, what their weight is, you know, the best numbers to reach them. I mean, cell phone numbers in a lot of cases. This is fantastic information for a jumping off point. So, you know, it's definitely not like you're calling somebody quote unquote out of the phone book and cold for the first time. They did request information before. For those of you that are out of the country and making calls, I think it's important to know that in America, we basically have, especially with people that answer the phone or emails or even their cell phones, are basically cut into pretty much 3 different types of people. Okay. Primarily, the ones that will answer the phone for everybody, and the ones that get something in the mail and they fill it out. Okay. If they're interested. The middle is they're really not sure. They get something in the mail, but they're undecided. They may fill the card out to get more information, but they're still on the fence and they're still very defensive, right? And then there's a third type of person that doesn't fill out anything by mail, doesn't request any information. They're the do-it-themselves type, okay? What you have here with these leads are the first 2 types of categories with people. They're the ones that buy anything that anybody sells to them, and the ones that are on the fence. So they're not all going to be easy, but they're all not going to be hard either. Okay? So, I think that's pretty much. Now, when we go into this next part, now you'll notice here too, this is the information that you're going to put on your cozy. You know, you're going to want, at the close of the script, which we'll be going into, you're going to want to make sure that you put all of this information in on the lead. Actually, our next section in this video, which won't be included in this video, it'll be in a separate one, is going to go into the appointment form. Once you've called this person, set the appointment with them, took the appropriate notes, your next step is going to be the appointment form. We'll go into that next, and I thank you for watching.